Hi, this is ProACT Sam with this episode of the Living Working Abroad show from ProACT Partnership, the expat experts. We know how, not just tax, but property, probates, wills, estates, anything that your family and business need to protect themselves across border and down generations. ProACT Partnership know how and can help you living and working abroad. So contact us at proactpartnership.com when you're ready with a question. We offer free reviews to all new consultations and clients, and our team of legal, tax, accounting and investment experts can help you every step of the way. Thanks a lot. We're looking at making tax digital today. Making tax digital is the future, but it's also part of the past. So let's have a look at this. What does it mean for the UK? It's a major change in the UK, but making tax digital is not new. They've tried to introduce it before, but it caught a cold around about COVID times and wasn't able to be rolled out properly at the time. And that meant a reversion to the old system. But it's back, came back last year. It's in beta at the moment. And then from the 6th of April 25, we're now into a full-on run-up to making tax digital over the next year, so it becomes operational from April 26. But we're here now. It should mean quicker processing with the new system. So already seeing these impacts and the benefits by inquiries that we're putting into HMRC are coming back much quicker than the old way. But we're also seeing some ghost accounts being created where duplicate updates are being sent to people from the old submissions that are still outstanding from 2 or 3 years ago and not been received, and the new submissions which have been processed quite quickly. So it's quite bizarre. We actually got a notice from HMRC recently saying that a client didn't owe any money on the one hand, and why are you making this claim for adjusting their setup, and on the other hand sending us a statement in the same post about the same client saying that they owe £19,000. So two systems, go system, we can sort that out. If you need any help and advice adjusting your systems, getting ready for making tax digital, or for doing a tax return for your property or business income in the UK or across border, contact us at proactpartnership.com. So there's a new way to put in tax returns now. So this is what we want to look at going forward. Under the old way, a self-employed person or a sole trader would do an annual tax return. So under the old rules, in April 26, say, you've got until January the 31st next year, from April 25 to January 26 to submit your return. At the moment, you can put it in by paper, and that paper return can go in by October, but the online return must go in by the end of January. So that's the old system, and that still exists alongside the new Making Tax Digital this year. And if you're self-employed, all your earnings is deemed to be earned on the last day of the year. So what that means from a tax planning perspective, as a sole trader with a UK-based sole trading business or contracting business, could make the return up to the 5th of April 25, make that return by January 26, and then pay any tax that's due. So it's a good opportunity to defer tax liabilities. Now, VAT registration in the UK is for when a business has got a turnover over 90,000 a year, and then you have to have a quarterly tax return, which is quite different. It makes a big difference in bringing forward your tax assessment. And under the UK system, once you get into the system with your business, potentially you can make a payment on account twice a year of what your estimated tax return is. But again, you've got this option to say, well, you know, business is down, I'm going to make a lower payment on account at this point. and then let everything catch up once a year without breaking any rules. Always follow the rules, never break a tax rule, because it comes back to bite you. So that's where we're up to under the old system. That all changes now. And the new Making Tax digital system is available now. For more information and guidance, contact us at ProACTpartnership.com. So, what's the big change with Making Tax digital? I've said the first point already. From April 26, there's no more paper returns. So 2025 is the last year you can do a paper return. So if you want to do a paper return, you need to do that by October 25 for the last tax year 24-25 in the UK, and that's the end of it. That's the end of it, okay? It's then going to be tax digital. So if you're self-employed or small business in the UK, it's Making Tax digital is the new way forward. Don't forget, who else needs to do a tax return? If you're an expat and you've got income arising in the UK, or they're asking you to do your tax return still, or you've got property rental business, that still needs to do the tax return, and therefore you're coming into Making Tax digital as well. So no paper tax returns from next year. So by next April 26, you need to be using the right type of tax return. You won't be able to do a tax return in the UK anymore on the HMRC government website. If you're a taxpayer living and working in the UK, you can do a UK tax return on the UK portal, but you can't do it for if you're non-resident. So if you're an expat living and working abroad, you already have to use specialist software. Now ProACT have got that specialist software, and we've used it for years, and we're online and we're digital, and we're already ahead of the game. So ProACT have got the know-how for in advance for Making Tax digital. So if you need any help and guidance with Making Tax digital, the transition away from a paper-based, spreadsheet-based tax return system on an annual basis, and then come to us and contact us at ProACTpartnership.com. So who then, the next big change after that is there's no more paper returns. The tax reporting becomes quarterly. So from April 26, if you're a sole trader or a contractor or small business in the UK, and this includes property rental businesses with a turnover of more than 50,000, not only have you got to do an online tax return using specialist software like the ProACT tax software, also you have to do quarterly returns as well, even if you're not VAT registered. So over 90,000, it's a VAT return every quarter, but now every quarter there's a tax report that needs to be done. And what this allows the tax office to do is obviously to update and make sure that you're paying the right amount of tax potentially sooner. It's 50,000 from April 26. So you take the action now and think, well, 50,000 is not going to affect me. Have in mind that in 2027, that the threshold reduces to 30,000, and in 2028 reduces to 20,000. So any expat, anybody with a property rental business, a sole trader, a contractor, or a small business operating out of the UK needs to do a digital online tax return from each year, including a quarterly return and the annual return to pay their tax online. So some big changes coming up. ProACT Partnership, we know this, we've been doing this already for our business, property and expat tax clients. We're software ready to do that. You can use accounting software and to keep your records and do your tax returns from that, but you still be able to use spreadsheets. So if you're a spreadsheet-based management accounting, you can still use that to do those tax returns and then upload the information from the spreadsheets into the accounting software for the tax returns. And that needs to be compatible with VAT if you're operating in the UK. So ProACT know-how, we know how to help people living and working abroad. We know how to do the digital tax returns, but consider when you need to be ready, okay? Get ready now. Making Tax Digital is available now, and it can be done now. You can do it for this year's tax return. You can reorganise your management accounting and your business records, so you've got the spreadsheets and the accounting system that's compatible to do a Making Tax Digital tax return report from next year. You may not need to do it this year, but you might need to do it next year if your income is over 50,000, or the year after 30,000, or the year after 20,000, but you will have to do it. The future is digital, not paper. The future is online, outside the HMRC for now, not in the old system. It's quicker, it's more effective. It means you can be more compliant, more tax ready. Your investment, your pensions, your banks will all want to see that you are fully compliant with international regulations. All that will happen if you're not fully tax compliant is your bank account, your investments, your pensions will all seize up and come unstuck. So living and working abroad is about living on the beach, spending more time abroad in the sun, and to do that, you need to be ready. Don't leave it till it's too late. Making Tax Digital is available now. It's compulsory from next year. You can enjoy yourself and see a sunrise of the paper returns and do the last one for this year, or you can get ahead and make those changes now. Contact us at ProACT Partnership. We know how to help you make your tax digital, and contact us at proactpartnership.com. If you do want to leave it, make your tax digital to next year, have in mind that if you're operating as a sole trader or small business, including a property rental business, and you decide to make tax digital for you by April 26, have in mind your first tax report is due by the end of June. It's due quarterly. So by the 4th of July, at the end of the first quarter of the UK tax year 2026, you need to do your first quarterly tax return for the 2025-26 tax year, not October or January like for this year. So in in April 25, you don't need to do your return until January 26. In April 26, your first return is due by 4th of July, by the end of June 26. So it's less than a year away. Your first Making Tax Digital return is due. So get ready now, plan ahead. ProACT know-how, we're already operating that system. Let us help you with your property rental, your sole trader, your small business enterprise, operating as a UK taxpayer in the UK or living or working abroad. And we will help you get your tax digital and stay ahead of the game, and make your life simple and straightforward going forward. Contact us at proactpartnership.com for more contact information. ProACT also help people living and working abroad, and there's changes that are going on a regular basis. One of the changes for Cyprus expats recently is that if you could prove your residency in Cyprus before 2020, as long as you're in the country, then you know, and you had an airline ticket to show you've been travelling into Cyprus, you could backdate your residency and potentially get the permanent residency sooner. That's changed now. If you have got an overseas property that you own in Cyprus, only if you've got utility bills before 2020 can you get access to get a residence permit before that, and potentially a sort of permanent residency which gives you access, citizens' rights in Cyprus, backdated sooner, because we can backdate it 5 years for you straight away. If you want to update your residency permit in Cyprus to get permanent residency benefits of the equivalent of citizens' status with state healthcare benefits, as well as 0% tax on dividends and some income, contact us at proactpartnership.com. Otherwise, in Cyprus, if you want to qualify for state healthcare and you're UK expat, there's a limited number of ways that you can get that. State healthcare in Cyprus requires you to have citizens' rights, either to have citizenship or permanent residency, or to have a residency permit and be working as a contractor and paying social insurance. Now, remembering that UK expats can't get a work permit for an employed position in Cyprus necessarily. There is a way, but it's very, very complicated. But a UK expat can come and work remotely from Cyprus and be a taxpayer here, but on a contract, a sole trader basis, or remote working, living, working abroad overseas. So they can't actually take a separate job, but they can work in Cyprus, pay social insurance, and if you're doing that as a remote worker, you get access to state healthcare here. The other way is if you're living and working abroad on a temporary basis as a UK expat in Cyprus or anywhere else in Europe, you can get what the British would call an S1. An S1 is states that you're living and working abroad and transfers your UK health service benefits to that state in the EU or in Cyprus. Okay. Now, you definitely can get that when you're got a state retirement being paid in Europe to transfer to your country of residency. But if you're working abroad on a short period contract, you could do that. So if you're running your own business, you want to go live and work in Cyprus for a couple of years, for example, become a tax residency there and save some UK taxes under the current regime, you could transfer there and you could bring an S1 for living and working abroad for a year or two. So that is possible. The UK also have the old health insurance card. It's called a GHIC now, a Great British Health Insurance Card. If you get one of those, that covers you for accident and emergency while you're travelling in Europe. So if you're going on holiday to Europe, or you're living and working abroad, or you've got an overseas property, you want one of those to get the health cover while you're in Portugal, Spain, Cyprus, Greece or France, anywhere in the EU, and certain other countries like the Bahamas or Turkey. But for more information and guidance on protecting your health care rights, living and working abroad, you can contact us at ProACTpartnership.com. ProACT know how to sort out healthcare for expats living and working abroad. In the UK, the 5th of April 25 was the end of additional top-up contributions for national insurance to catch up. Expats for years left the UK, didn't always maintain the national insurance contributions. UK need 35 years of national insurance contributions to get a full UK state pension. If you've lived and worked abroad and you missed some years, you've got the potential to catch up. Now this catch up for 10 years was brought in by the Gordon Brown, Tony Blair government when they changed things as part of their the last 25 years of fabulous UK government and mess-ups by politicians. And they changed from the old UK pension system to reduce the state pensions down, but allow people to catch up if they've got missed years. Now, if you didn't pay your national insurance while you're abroad, there's two ways to catch up. Well, there used to be two ways to there's three ways to catch up. There used to be, there's now only two. The first way is if you're living in a country with a reciprocal social insurance agreement with the UK, those years could be added into the UK state pension. But, while that includes all EU countries and some others, it also enables you to, if you spent 20 years in another country, you could get a state pension in that country and back in the UK if you maintained your national insurance contributions there. So you could get two state pensions to top up. Or, with a reciprocal agreement, you could use your European 5 years living abroad, social insurance paid there in that overseas job. You could use it to add to the UK, to top up the UK to your 35 years to get your full UK state pension. The third way is that you can add back So you've got this option to pay up to 6 years in arrears. So if you've not paid national insurance for 6 years in the UK, you can pay for the current year, 25-26, plus the previous 6 years, and give yourself those 6 years credit of national insurance to add towards your 35 years, and then continue that. Unless you defer your state pension in the UK, you can't add beyond your state retirement age. But you know, state retirement age is coming, so you know either what you need to do to increase it or not. Generally, deferring pension for a year to top up your contribution doesn't really work. You're going to add about 300 a year maximum to your pension, but then you could still be losing 5,000, 6,000 a year's worth of pension income. So once you get to state retirement age, that is it. Got this big issue that lots of applications went in to top up for the 10 years, but they needed the application to be processed by HMRC's National Insurance Contribution Department. They didn't process them. The only announcement that came out was, if you let us know, we'll still process the application after the end of the deadline, which was extended and extended, and the last extension that was announced was the 5th of April 25. Now nobody's received confirmation, so nobody knows what's going on. So I'm waiting for a policy statement or for the assessments to be issued. ProACT have got lots of clients like this. We put complaints in. If you put in a complaint in, if you put an application in to apply for state healthcare as national insurance application to top up your UK state pension, either as class 2 or class 3, and you've not heard for all these years, it's time to complain now. We're actively complaining, raising the bar, demanding answers for our clients and fair treatment. It's not right that for 20 years HMRC has procrastinated on this and not allowed people the right to fairly update. If you're living and working abroad, you can make a voluntary contribution of class 2. They tried to abolish that a couple of years ago to say that it has to be a class 3 top-up. No, if you're living and working abroad, there is a right to submit class 2 at 300 a year, not at 900 a year. And this is the conflict that the government's got. What is the law? What is fair? And we're happy to campaign for you. If you think you're being hard done to and you can't get your full UK state pension rights, and you want help and guidance on that, you can contact us for consultation. We do online advice meetings, or you can join us as a retained client to give you that advice and guidance. Contact us at ProACTpartnership.com. Thanks a lot for listening today. You can follow us on the Live and Work Abroad show on Facebook, on Twitter, on LinkedIn, on YouTube, or go to our website at ProACTpartnership.com. Property, investments, wills, estates, family and business trusts to protect your assets across border and down generations. Contact us at ProACTpartnership.com. Thanks a lot for listening, and we'll see you next time.